Let's bring in the Wall Street Journal's Doug Cameron, and we have Sheila Kahyaoglu from Jefferies here at Post 9 as well. Welcome to you both. Doug, I want to start with you because you also put out a report today that Boeing is eyeing raising fresh funding. I want to make sure I have the context of the story right. It's not a company that is facing a cash crunch right now, but obviously with all these types of costs going up, it may make sense to raise more debt.
Absolutely. The compensation settlement that Phil just referenced there, that's, I think, the fourth or the fifth that's been disclosed, and there's probably others that haven't been disclosed. So that's extra money that's going out the door. And, of course, most importantly, Boeing isn't delivering the MAX, which means that a big chunk of the purchase price of the aircraft the airlines pay isn't coming in the door either. So that's creating a gap which it's looking to fill by a variety of measures, and raising cash is one of them.
Sheila, is this a surprise to you, or analyst community already got that factored in that they're going to have to be raising some more debt this year?
So Boeing ended Q4 with about, we think, ended Q4 with about $10 billion in cash, and or Q3, and they burned $5 billion. They like to keep $10 billion on the balance sheet in terms of cash for working capital needs. So it wouldn't surprise us if they raise another $5 and bring their total debt to about $30 billion.
Should they cut their dividend in the meantime, or is that something that investors would hate even more than the idea of raising extra debt?
So I think the production halt kind of abates that risk, right? You're having Boeing burn about $1.1 billion of cash per quarter on a free cash flow basis, and the billion is another 1.1. So they're burning 2.2 billion, and with 10 billion of cash on the balance sheet and 25 or 30 billion of debt, they should be able to handle it.
Phil, how do we put all of this news together? You've got just a few moments ago, Spirit AeroSystems, one of the top suppliers to the 737 MAX, saying that it's offering some employees voluntary layoffs. You're getting more of these deals with airlines in the meantime, specifically for 2019 as well. Are we starting to get to a point where all of it is, I guess, coming together, and we are moving closer to return to service and past the peak crisis levels, if you will?
I don't think we're at full flush-out mode yet, Morgan. We're getting close. I think the firing of Dennis Muhlenberg, that may have been the absolute bottom, but we're not to a point where people can say, oh, yeah, we've seen the worst. There's no surprises left. There are still a number of things that need to be worked out with the FAA and other regulators, and until we get a sense, at least with the FAA, then I think you can say, okay, we see light at the end of the tunnel here. We're not quite there. I think we're in sort of this flush-out mode here where they're trying to do the compensation, get a number of things in order.